welcome on board Abhishek Bansal, the CFO at Justdial, who's going to be joining in on the show. Of course, lots to understand from them, given that their margins have risen by more than 200 basis points. It's been a stellar performance, really, and it's managed to beat the analyst estimates for a fourth quarter. But Abhishek, what explains, this kind of growth that you've seen in the margins? And do you think margins of 15% plus are achievable for the financial year, as more sales hiring is being done by the company for the B2B segment?
See, margins have been on an uptick in last 2 to 3 quarters, and they should see a continued uptick in coming quarters as well. So pre-COVID, we used to be at a sustainable 25% plus EBITDA margin, and our endeavor is that sometime in fiscal 24, we should be going back to the same levels. On reported revenue of 845 crores, EBITDA margin stood at say 15.3% on adjusted for ESOP expenses basis. But we collected 945 crores, almost 100 crore higher versus our reported revenue. So to that extent, margins were already higher on cash basis, and even on reported basis, they should continue to see sequential uptick in coming quarters.
Now, top line has seen a modest growth of 5% on a sequential basis, and the overall there seems to be a short-term pressure on business sentiment because of inflation and interest rate hike. How is the consumer confidence looking like?
On our top line, last particular quarter on a per day basis, top line sequential growth stood at 7.4%, which as anyone can understand is quite healthy in the current environment. So this particular year overall, our particular revenues grew about 31% year on year to 845 crores. And our collections had a very strong 44.5% growth to 945 crores. So to that extent, so far, business is bouncing back well. And I think we are exiting FY23 on a very strong footing. And this momentum should help us grow our revenues as well as grow our margins in coming year.
Now, wanted to get in an outlook as well, then Abhishek, as to what the key trigger for growth is for the company. Active paid campaigns has been one of those factors, but that growth has come off a little bit into single digits in Q4. Your average realizations are below pre-COVID levels of 18,000 rupees per customer. So by when can we see a catch up to the pre-COVID levels?
So realizations, as I said, on a reported basis, they might seem slightly lower versus pre-COVID levels, but my deferred revenue of over 430 crores, that deferred revenue has a much higher realization embedded in it. So as we move into future quarters in FY24, we will see a realization uptick. Overall, I think top line growth for us will partly materialize, say half of it should materialize from paid campaigns growth, and rest via improvement in realizations.
Right. So could you spell out how much revenue contribution comes from the B2B segment, and with strong sales hirings for this segment, what kind of revenue, contribution expectation do you have for the next 5 years?
So B2B segment contributed about 26% to our revenues, and this contribution, say about 3.5 years ago, stood at about 20-21%. So definitely B2B side of revenues are growing at a faster pace, and we expect this sort of trend to continue because SMEs in B2B segment have a very strong need of a digital advertising platform such as ours to get discovered for users pan-India. So basis that, I think this 26% B2B contribution should continue to see uptake in coming years.
Cash development, company has cash levels of about 4,000 crore in March 2022. Is your company looking at some acquisitions to bring synergies then?
So at this point of time, the 4,067 crore treasury is safely parked in mutual funds yielding 7.2, 7.3% returns. We would look to deploy part of it for any organic or inorganic opportunities if they come along in coming quarters or years.
All right, let you go on that note. Thank you so much for